But let's do one thing. TCS comes out with its numbers later this evening. Reema's here to tell you what to expect this time around. Reema.
Thanks so much for that. Well, the stock has seen a pretty good run-up in anticipation of good numbers. Last week, it was up 5%, 16% since the start of the year. But in the last 1 year, TCS has underperformed its closest peer Infosys by quite a big, of a margin. Now, particularly when it comes to Q4, expectations are pretty high. In fact, TCS is poised to report the highest sequential growth compared to peers at close to 4.8% in terms of dollar. Now, revenue growth will be boosted by the ramp up of 2 large deals, that's Postbank as well as Prudential Primerica. According to Nomura, these 2 deals can actually add close to 2% to the company's top line. On margins expected to be flat sequentially, and that's because the wage hike for TCS kicked in the prior quarter, and profits, according to our poll, should be up close to 7%. Now, the focus is going to be, of course, on demand trends and, the kind of deal wins, the outlook sectorally, but also on the supply side situation. The company's already announced that it's reverting to a normal wage hike cycle, which means the employees will be getting their second wage hike in a matter of 6 months. Is talent in short supply? And is that going to be a limiting factor going ahead? That will be very crucial. Now, given the run-up all the IT stocks are seeing, the valuations are pretty premium. TCS is trading at 31 times FY22 PE, higher than its historical valuation multiples of 24, 25 times, and it continues to trade at a premium to Infosys. Back to you.
Okay, Reema, thanks a lot for that. But that's been the case for some time now. We have Sandip Agarwal now joining us from Edelweiss. He has, of course, been, I think, the most bullish analyst on IT stocks. Sandip, good morning. So TCS 31 times, you think still sustainable?
See, I don't see the stocks like this. As you recall, we have been saying for last 14 months that it is a big upcycle, and in an upcycle, multiples will only matter. So we should only look at multiples if the business is going down, or how's the business cycle. Because as I said, and you can see the numbers, every quarter analysts are upgrading numbers, companies are upgrading outlook. So I don't know whether this 31 multiple is right or not, because same thing happened in 2009 to 16 cycle. Forward earnings basis, stocks were looking at 35 times, but when actual numbers came, they were looking at 20 times. So this earnings estimate itself are massively underestimated, and I think again this quarter everyone will upgrade numbers. So that's all I can say. So I think this multiples are not the right way to look at it.
Okay, let me look at it from the earnings and numbers way, Sandeep. I put together this 4.8% growth that is expected in dollar earnings in fourth quarter. That is some $5,700 and nearly $6,000 million or $6 billion. If you add that in the full year, their dollar revenues rise to about $22,200 million. The point is, year-on-year growth for dollar earnings will actually be about 0.5% to 1%. It's not looking that great. What is the earnings growth you are expecting at all? First this year, I'm moving from revenue to earnings. First this year, and then FY21 and then FY22.
Yeah, exactly. So this is exactly what Lata, we have been saying that, first of all, if you see our estimates, we are at 5.5% dollar growth for the current quarter. And our PAT growth for the current quarter is 8.5% year over year. And we have to remember that, we are coming out with from a painful scenario. So, next year you will not have all this pain which we have witnessed in this current year. So next year you will have good revenue growth, which I think will not be less than 15-16% in dollar terms. And your margins, whole street is anticipating a big decline in margins because they think that a lot of cost will come back. I can tell you with a lot of assurance that we have done very detailed work on every single cost item. And I don't think that, our margins of TCS, anyone will go down. Maybe they can go down for a quarter when they are giving wage hike and bonuses, but they will recover back very strongly because demand environment is very strong. And you can see data of last 30 years, whenever demand has been strong, the operating leverage is very substantial. So below cost of goods sold, the costs are mostly semi-variable, where you get a lot of operating leverage. So I think that is something which needs to be seen in more detail. And I think that gives me very high confidence that, TCS will post at least 18-19% EPS growth for next 2 years comfortably and 15-16% dollar revenue growth comfortably.
Okay, Sandeep, I have many questions for you, but you know what? We also have to focus on the mid-cap IT space because Their numbers are expected to be very strong. So stay on. My colleague Reema is here to tell us what to expect from the mid-cap IT sector this time around. Reema.
Thanks so much for that. Well, expect a strong performance by the mid-cap companies as well. So we're working with a revenue growth which ranges from about 3 to 5%. And this is much higher than what you typically see in the March quarter. Now, when it comes to margins, companies like Mindtree as well as L&T Infotech will report a quarter-on-quarter decline in margins given the wage hikes which kick in. But what we should focus on is the kind of margin improvement these mid-cap IT companies have reported in this year itself, in the 9 months. And you will see that on your screen. Something like Mindtree, 760 basis points improvement in margins from Q1 to Q3. And even L&T Infotech, L&T Tech, you would see that. Emphasis is the only one which hasn't reported a margin improvement, and that's because they've chosen to reinvest the margin gains into the business. The factor to watch will be wage hikes and attrition because it affects the mid-cap companies more than large caps. Large cap companies are better able to absorb, higher attrition. When you look at the stock gains, massive moves. So it's a 200% up move seen in the likes of Mindtree as well as L&T Infotech in the last 1 year. And valuations for all these mid-cap IT companies across the board, again, are trading at much higher levels. The most expensive ones are L&T Infotech as well as L&T Technology, which are trading at 34 times FY22 PE. So more expensive than a TCS as well. Back to you.
Okay, well, lofty valuations there. Sandeep, good morning. What would your pick of the pack be from the mid-cap IT space?
So, we have been for last 2 years writing very boldly on the front page of every PDF we release that we see Mindtree and L&T Infotech will create same shareholder value what Infosys and TCS has created in next 10 years. So I don't have any change in view on that. After the results, there could be some cool off of 5-7%. But if you recall on 18th of March when Accenture numbers came, since that time we said that, by the time results come, most of the large cap will move by 10% and mid cap should move by 20%. And we are beyond that number right now already in just like 20 days, 25 days. So I think there could be some cool off from here, but these are very structural stories and they are in a very big upcycle. So, for a long-term investor, I would not suggest them to sell at all. If someone wants to, switch some weight for some small period of time of 45-50 days after the result, I would not say no. But I think structurally these stocks are going to generate huge amount of wealth, whether it is Mindtree, L&T Infotech, Coforge, Buildasoft, Persistent. They are very good stories and they are caught in the right side of the cycle. So I think the immense value will be generated over next couple of years.
Give me one number, deal pipeline, what should we expect from TCS for the fourth quarter?
So see, the only challenge in giving that number is, sometimes when we because of small milestones, deals don't get signed, in the sense some small formalities which are left out. But I would only say this, that, if you go by Accenture's deal signing and Accenture number on outsourcing, TCS numbers will be very, very strong. There is no doubt about it. I would refrain from giving a number, but I can tell you it will be one of the strongest in history of TCS.
Okay. All right. Thank you very much, Sandeep. We will touch base with you as soon as we get the TCS numbers, whatever, 4:30 or 5 today. So all of you watch tight at that point in time, the TCS numbers, the big bellwether of India's earnings season. Quick break and thereafter it will be all technical strategies. Sudarshan Sukani.